Your home insurance bill just landed in your mailbox, and the number is so high you gotta think it's a typo. Your first thought is, how is this even legal? But the real question you should be asking is, who is getting rich off of me? You are being forced by your mortgage company to buy a product in a broken market that is designed to squeeze every last dollar out of you. This isn't just about rising costs, it's a systemic shakedown. And I am going to show you exactly how they do it. That sinking feeling when you open your mail insurance renewal is becoming a nightmare for homeowners right across the country. In a market like Toronto and the surrounding area, seeing your premiums jump dramatically in just a few years is all too common story. You budget for your mortgage, your property taxes, your utilities, but now this one bill is also doubling, threatening to wreck your entire financial plan. And here's the most infuriating part. You can't just walk away. You can cancel Netflix, you can stop ordering takeout, but you cannot cancel your home insurance. Why? Because you'd be in a breach of your mortgage contract. In Canada, there's no federal or provincial law that says every single homeowner must have home insurance. The entity forcing you to buy this product is almost always your bank. Your mortgage lenders requires you to have a policy to protect their asset, not your family, not your photos, but the brick and mortar they have a massive loan on. Now, sometimes a condo board might require it as well, but for the most part, it's the houses. It's the lender calling the shots. And because virtually all major lenders does it, you have no real choices. It's mandatory by contract, and that simple fact creates a captive market where the insurance knows they have you by the. You have to buy what they're selling no matter what they decide to charge. Now, if you call your insurance company and ask why the rates have been through the roof, they will read a very well rehearsed script. They will talk about the inflation, supply chains, and rising costs of building a home. And to be fair, they aren't really totally wrong. The cost to rebuild has been pushed up by soaring material and labor costs. According to the data from Statistics Canada, residential construction costs have surged up a staggering 66% since 2019 alone. So yes, when a house does burn down, it's genuinely more expensive for them to pay that claim. They will also point out to the climate change and severe weather. And again, the numbers are terrifying. In 2023, severe weather caused $3.1 billion in insurance damage across Canada. Think of it as insurance for insurance companies. Because of this massive climate disaster happening all over the world, reinsurers are jacking up their prices, and that cost gets passed down directly to you. So, case closed, right? It's just the cost of living in a risky world. Not so fast. That's not the whole story. The real problem isn't that the costs are rising. It's that you are a captive customer in a system that is perfectly designed to extract the maximum amount of wealth from you. If you dig into the numbers, some analysts show that home insurance premiums have risen faster than the general rate of inflation, but get this, they also show that the premiums have risen even faster than the index that track the actual replacement cost of homes. Even when you account for the rising costs of wood, the shingles, the labor, insurers have raised their premiums even faster. That doesn't look like a simple cost recovery. It looks like exploiting a captive market to juice their profits. This is where the scam reveals itself. Because you are forced to buy insurance, there's no real competitive pressure to keep prices down. Sure, you can shop around, but if every company has decided to hike rates, your only choice is which bill is slightly less painful. You have zero leverage. And it gets worse. What happens if your policy lapses? Maybe you miss a payment, or your insurers drop you after you made a claim. This is when the mask comes off completely. Your mortgage lender has the right to slap you with something called forced place insurers. This is a policy the bank chooses and buys for you. It's almost always shockingly more expensive than a regular policy, and it provides you only with bare bone coverage needed to protect the lender's financial interests, not you. It's the ultimate proof of the power imbalance. You fail to play by their rules and they will put you in a financial chokehold. If this has ever happened to you, or if you've seen your rates skyrocket, tell me in the comments below. We need to see how widespread this is. And in high-cost housing markets, this is just one piece of affordability crisis. Many homeowners, especially first-time buyers, can't scrape together a 20% down payment. The result, the federal rule forces the lender to buy a mortgage default insurance from an entity like the CMHC, a cost they happily pass directly down to the borrower. This is another mandatory insurance product that can cost many thousands of dollars, sometimes even tens of thousands of dollars if you live in Toronto, back right into your mortgage. And who does it protect? Not you. It protects the bank in case you default. So you can end up with two layers of mandatory insurance, one required by the federal rules for your lenders and one required by the private contractor by your bank. Both are designed to shift risk away from the financial institutions and place a massive burden squarely on your shoulders. So what in the world can you do about this? Let's be honest with each other. In a system this broken, individual solutions feel like putting a band-aid on a broken leg. We can't individually fix the rigged game, but that doesn't mean you are helpless. While we fight for bigger changes, you need to protect your own wallet. First, become an aggressive shopper. Don't just let your policy auto-renew. Set a reminder 60 days before your renewal date and start getting quotes from different insurance companies. Make sure the companies actually compete for your business, even if the savings seems very small. Second, talk to your broker about your deductibles, the amount you pay out of pocket before the insurance kicks in. Raising your deductible from $1,000 to $2,500 can often lower your annual premium in a meaningful way. It's a trade-off, for sure. You take on more risk, but you get immediate savings. Third, ask about discounts for protecting your home. Many insurance offer small breaks if you have a sub pump, a backflow valve to prevent sewer backup, or a monitored alarm system. Every little bit helps. And when you talk to your broker, ask the hard questions. Ask, how much of this increase is based on my personal history versus the general rate hike in the whole area? Make them justify the numbers. But the real fix isn't about saving a few $100. It's about changing the system. The current structure allows the banks and the insurers to offload their risk onto the homeowners while protecting their own profits. The ultimate solution has to be systemic. We need stronger government oversight that actually scrutinizes premium hikes, that outpace inflation and rebuilding costs. We need ironclad rule that cap the price of forced place insurance and guarantees minimum protection for homeowners. And we need to reform the mortgage default insurance rules that add thousands to the cost of a home for the primary benefit of the banks. The people with the power, the banks, the insurers, the regulators are all counting on you to get angry, then sign, and then just pay the bill. They are counting on you to surrender. Don't give in to them. The first step is making sure everyone knows what is going on. Share this video, send it to your friends who are homeowners, your family members struggling with their bills, and your local member of parliament. The more people who understand how this shakedown actually works, the more pressure we can build to finally demand a fair deal. This isn't a left or a right issue, it's a financial stability of the Canadian families. Subscribe and hit the like button and to stay tuned for more information just like this one. Because the more you know, the harder it is for them to take advantage of you. If you are thinking of buying or selling real estate in the GTA, please give me a call directly. My information is in the link below. Until next time, see you soon.